Hey guys, in this video we're going to be speaking about moving averages or MAs. It's a very popular indicator used in technical analysis, used to help smooth out price action by filtering out any noise in the market from random price fluctuations. And this is what it looks like. I've plotted here my 50 moving average, which is my red line here, and my 200 moving average here, which is my green line. Moving averages are trend following or lagging. Which means that basically it's based on previous price data. Remember, the only thing that's completely up to date is the movement of our candlesticks, and the moving averages are just giving us an interpretation of price action. The most commonly used moving averages are simple moving averages, SMAs, and exponential moving averages, EMAs. The simple ones are very simply based over a defined number of periods, and the exponential ones gives greater weight to the most recent price data. The ones I have plotted here are EMAs, and I can simply switch between the two by clicking simple or exponential once double clicking one of the EMA lines. Like I said, my 50 EMA is my red line, and I can customize that as I choose to. Generally speaking, we call this an upward moving chart, and I can see that very clearly by my short-term moving average sitting above my longer-term moving average. And if you are a trend following trader, you'll tend to only be looking at buy entries on this particular chart. Moving averages also become very useful in determining what we call dynamic support or resistance, and in this case we can see a dynamic support line demonstrated by this 50 EMA as price continues to bounce down off of it. And I'd continue to believe the same would happen as price weakens up at this point here, and as it hits my 50 EMA I could potentially be looking at a long entry. As with all indicators, we're not going to use them singularly, and we'll be looking to gain extra confidence by using a range of other reasons to enter potential entries. Our 200 moving average will have a much greater degree of lag than our 50-day moving average because it contains prices for the past 200 days as opposed to the last 50 days. And as I mentioned, while moving averages are useful on their own, they also form the basis of many other technical indicators, and a very popular one would be our MACD, which is the moving average convergence divergence, and we'll be doing a video on that one very shortly.